We now continue with more of The Mark Milton Show with The Smash on 590 The Fan and 590thefan.com.
All right, you're listening to The Mark Milton Show with The Smash. Smash is with getting a second win. He's going to stick around with us for this segment. He's a Wall Street connoisseur, so he wants to hear this segment. We are very fortunate here on The Mark Milton Show with The Smash, broadcasting from the Miller Furniture Studios, to have with us as our guest Matthew Fairbairn, who is a certified financial planner and accredited investment fiduciary with Visionary Wealth Advisors. Matt, welcome to The Mark Milton Show.
Mark, thanks for having me.
Absolutely. Matt also has the distinction of having lived with me probably longer than anyone besides my wife and family as my long-term college roommate and post-college roommate. Yes. So, Smash, I'm sure you can have a field day with that.
Oh, take its own segment.
That is
give me the mic.
That is its own segment. I remember speaking of viral diseases, I do recall. So we lived together when I was in law school over in Lafayette Square, and Matt had, what was it at the time, Matt? It was the swine flu.
Swine flu, that's right.
Yeah, so Matt actually owned the condo. I was his tenant, sharing a bedroom, and Matt has the swine flu. And I mean, really showed no regard for my well-being as his roommate, just out in the living room, sweating, sneezing all over the remotes. Somehow I managed to not get the swine flu, but I'll never forget that.
Wow. Oh, that's great. Thanks for sharing.
Actually, I remember one time, we had these big windows in the front with these big drapes, and Matt's mom came over to drop off a pot of soup for him. And she kind of ran up to the step, put it on the step, and scurried away in fear of the virus. And I'm sitting there looking out the window thinking to myself, well, I'm in here. What does that mean for me? But anyway.
That was for 2020.
Absolutely. Well, we're not going to talk about that. We're going to talk about what's been going on in the stock market lately. Obviously, it's been in the news with Dave Portnoy Barstool, making headlines regarding a number of different stocks. But first, I want to, have the listeners tell you about your background, Matt. You're a longtime financial advisor, wealth manager, and so just give the listeners a little flavor for your background and expertise.
Sure. So, above and beyond being a swine flu survivor, I have been a financial advisor, certified financial planner for a number of years, about 12 years. And I've seen a lot in the stock market. What we've seen here over the last couple of weeks is certainly, newsworthy. It's entertaining, if nothing else. So I'm happy to talk about it today. I primarily focus on affluent families managing their investments, handling their financial goals. Currently affiliated with Visionary Wealth Advisors, which is a rapidly growing RIA. Just recognized with a really cool honor in the St. Louis Business Journal, the fastest growing RIA in the area. It was close to 100% growth in 2019 and approaching about $2 billion now in total assets under management for our clients, and trying to keep everything moving forward.
Awesome. Very cool. So help me understand. I mean, obviously, we took finance courses together at Illinois, and shorting stocks is something that I understand big picture. But essentially, and correct me if I'm wrong, what happened here is there's an online community, this Reddit group, who basically figured out that some hedge funds had shorted certain stocks, right? And then they decided, hey, we can make money by buying up those stocks and driving the price up and, basically forcing these hedge funds to cover their positions at higher prices. Is that essentially what happened? And can you kind of explain to listeners what exactly took place when it comes to the GameStop stock?
Yeah, no, you're spot on. So shorting a stock in and of itself it's a sophisticated investment strategy. It's not typically used by what we would call the retail investor, the people that are on these Reddit message boards. Instead, it's mostly utilized by hedge funds, firms on Wall Street, probably the most public, the most well-recognized happening of this sort was put in the Hollywood movie The Big Short that came out a number of years ago, where a handful of severely sophisticated investors ended up shorting the housing market and clearly made a lot of money. There was a lot of drama along the way. This is reminiscent of that in a number of different ways, but essentially these sophisticated hedge funds were betting that GameStop, AMC, a few of these other companies would decline in value. It's kind of the inverse of what a normal stock purchase would be.
Okay, and then, but how did it? So I guess what I have trouble understanding is, why did the price then go up so dramatically with GameStop? Because there was no fundamentals that would have said, hey, this stock's worth this, but yet the stock went to, I mean, at one point I think it was close to $500 a share. So what caused that to happen?
No, you're 100% right. The fundamentals of whether it's GameStop or AMC or BlackBerry, Nokia, it was almost if you could name a stock of a company that you didn't think was still around, they were on an incredible run. So the fundamentals weren't supporting it by any stretch of the imagination. What was actually happening, and it's really fascinating. I think we'll probably see a movie on this in the near future because it's incredible what happened. But what they did, and what I'll call them the Reddit army, because there was thousands of individuals that were on this message board, and they ganged up together. They put their resources together. They had a common theme, and behind the leader or a couple leaders that did a lot of due diligence, this wasn't an accident. They found GameStop, for example. It's public information how many shares are shorted. And at the time that they initiated their initial buys, over 140% of all outstanding shares were held short. So the math on that is pretty compelling, that if you can, and it's above and beyond, it's also fairly thinly traded. So if they could get the economies of scale, get the numbers of people acting accordingly in lockstep, and buy these shares, therefore forcing the price up, they could implement a short squeeze, which then rushes where these hedge funds need to rush out and either risk losing potentially an unlimited amount of money. That's the risky portion of shorting, or buying themselves to close out their positions and therefore continuing to drive the price high. And that's exactly what we saw when the price jumped from, it was trading at $4 back in 2020 to it hit almost $500 within the last couple of weeks, before it's kind of come back to earth here a little bit since then. But there was a lot of regular retail investors that were able to make a lot of money during that steep incline.
Yeah, and that's what we've seen a lot of in the last year or so with people at home. I get questions. I've probably had more questions from prospective clients on, hey, what does it take for me to be a full-time trader for tax purposes? That's come up a lot in the last year because you've seen this proliferation in basically day trading, which I find, contrary to what I would view as sort of a sound investment strategy. I mean, people who probably aren't that sophisticated, aren't that knowledgeable, trying to time the market and do things like that versus, taking more of a long-term approach to, investing, being diversified and kind of playing the long-term game. But that's what you had here. I mean, it seems like it was a lot of, the Robinhood customers who had these accounts that they set up who would just, I guess that's who the Reddit army, they went in and just bought, millions of shares? Or, I mean, how much are we talking about in terms of pooled money was used to drive the price up? Do you have any idea?
Oh, so that's a great question. So it's interesting that the volume was astronomical, but I saw a report on CNBC, and this kind of blew my mind. The average hold time for an investor, so, we talk all the time about buying and holding as a great sound long-term strategy. The average hold period over that couple-week period was 40 seconds. So it was a ton of recycled money, people buying and selling from themselves to continue to force that price higher and higher.
But the strategy was to hold so that the price would keep going up because the hedge funds or whoever had it shorted would. That's what I don't understand. So they basically were holding on to the stock, and they kind of had to all do it together, right? I mean, they almost had to be coordinated for it to work. Otherwise, if people started selling, then the hedge funds would have been able to get out of their positions.
That's exactly right. The amount of faith and coordination that went into this is really pretty remarkable when you think about, thousands of strangers that have probably never met each other in real life, but are connected on a common theme through a message board, and, trying to take down Wall Street was really there was a little bit of anger in the bits that I've seen on this message board, but they acted in conjunction together. This would not have worked if they didn't have the numbers that they had.
Yeah, it really is remarkable. And also, the fact that they were able to hang on as long as they did and stay, stay the course, so to speak, to be able to. And I know I saw one report where a guy made like $24 million. He started with 10 grand, and it's just remarkable.
Yeah, and what we'll see now, it was on the way up. I think it's pretty easy to stand by in conjunction now that we're on the other side and the price has declined by almost 90% over the last couple of weeks. There's certainly still members of this quote-unquote army that are still holding the stock and are watching their investment disappear in front of their faces, and we'll see what their sentiment is towards the rest of the army when this is all said and done. We're about at the halftime point here, I think.
Well, and one of the biggest aspects of this story was this Robinhood, which, there are many trading platforms, but Robinhood was sort of the focal point because so many of these Reddit users were Robinhood customers. And at one point earlier this week, Robinhood basically stopped allowing the purchase of GameStop shares. And, that obviously drew scrutiny from a lot of people. I mean, you had Dave Portnoy, AOC, and Ted Cruz all in agreement that what Robinhood did was wrong. And so what was the effect of them stopping the purchase of those GameStop shares, at least on their platform?
So the ultimate effect was much less buy side out there. So the price declined. I think it declined 55% in the day that they allowed no buying. They did allow people to sell, and on the surface, it gives the illusion that the hedge funds got a hold of Robinhood and said, "Hey, you gotta stop what you're doing. It's costing us billions of dollars." But in reality, it was not that whatsoever. They didn't turn their back on their customers. There is a number of very complex underlying metrics that go into actually filling these buy orders. They had to have billions of dollars on hand, Robinhood as the entity, to transact the buys and sells that were going on. When you and I buy a stock, it hits our account within seconds and it looks like we own it. In the background of where Robinhood is coming into play here, there's a T+2, trade plus 2 days. So they are coming up and essentially moving some funds around on their end. And if they didn't have the funds or the liquidity to facilitate all those buys, it could have been much worse than just saying you can't buy these handfuls of stocks for a day or two. So it was SEC FINRA driven stuff that was going into that. It was not a turn your back on retail investors for the sake of Wall Street.
Wow, that is interesting stuff. This is the Mark Milton Show with the Smash. We've got Matthew Fairbairn with us here, certified financial planner with Visionary Wealth Advisors, breaking down the Reddit Army saga. So talking about the Robinhood action again, so they stopped the ability to buy it, but you could still sell it. So then it raised the question for me, well, how can you who's buying it then? If you're only allowing sales, is Robinhood basically buying the shares then if you were willing to sell at that point?
So there's still a plethora of other custodians. Charles Schwab, TD Ameritrade, Fidelity, they were all open for buy orders, and there's a number of other larger entities that don't even use custodies that can transact on their own behalf. So it was just one player in the game.
But if I wanted to sell my GameStop share through Robinhood, I could still do that. It would just be essentially getting purchased by somebody on another platform.
Bingo. That's exactly right.
That makes more sense because I was thinking to myself,
hey guys.
Yes, you're still with us.
Yeah, is this the Mark Milton Show?
Yes, it is.
Can I ask a question real quick?
Absolutely.
Okay, so Matt, hi. And Matt, let me ask you, who had, in your opinion, the biggest influence on Robinhood? Was it Little John or Friar Tuck?
Before our time, even Smash. But I mean, the Robin Hood tales are.
You guys are young, too young.
How'd your portfolio weather all this, Smash, with
Well,
all
I tell
the
you what,
craziness?
man, when I think of our show, I think of the Wolf of Wall Street. I think, for example, I parallel you to DiCaprio himself.
I mean, the looks are certainly there. I would give you
and
that.
then I parallel producer Dave, to Matthew McConaughey. He was a great character in that. And I'm the lovable Jonah Hill, a little bit plump, a little bit sad, yet everybody loves me. It's fantastic.
I love it.
Wonderful. Let me ask real quick, Matt, you are familiar with Wall Street. I know the movie. Do all the girls look like Margot Robbie? That's all I want to know, my man.
You know what? I think that might have been romanticized just a little bit.
Oh, you think so?
That's
Yeah.
not what a day in my office feels like.
It is a great movie. Well, we appreciate you joining us, Matt, to share your knowledge and expertise, because I was captivated by this story all week, and
That was a
obviously
great story. Really.
Dave
You know
Portnoy
your stuff,
knows
Yeah.
how to get attention, and certainly brought a lot of attention to this story. So we appreciate you sharing your knowledge with us.
Thanks for having me.
Absolutely. That's Matthew Fairbairn, certified financial planner with Visionary Wealth Advisors, joining the Mark Milton Show with the Smash, broadcasting from the Miller Furniture Studios, presented by STLTaxLawyer.com. Smash, did you find that? Did you follow all that?
Is Matt still with us?
Yeah.
He's still there.
Matt, one last question from me, man. If Mark Milton was so good financially as far as the classes are concerned over there at the University of Illinois, why was he always seen around campus spare changing? That's my question.
You know what? He's been hustling since I've known him.
There you go.
My man.
He knew me when I was the Texas Roadhouse server, Smash. Big Country was my nickname on my name
I
tag.
remember you telling me
I'd come
that.
home smelling of rolls and cinnamon butter.
They ought to make a cologne off of that.
Oh,
man.
I'll tell you what, all the ladies loved it, Smash.
Yep. that
The
was
honey
good
cinnamon
food, man.
honey cinnamon butter. All right, we got to
Right
wrap up
on.
the segment. This is the
Okay.
Mark Milton Show with the Smash, broadcasting from the Miller Furniture Studios.